Hey everyone, it's the Geeks from the Geeks of Finance. Today we're going to be talking about option dealer cluster zones, what they are, how to use them, and we'll show you some examples, taking a look at the SPY and the S&P 500. We're also going to take a look at the Qs chart and some gamma levels, and we'll talk a little bit about earnings as well. So I'm here with my partner, Sean. How you doing, Sean? What have you been looking at this week?
Yeah, we're right in the midst of earnings season for all the big tech companies. I usually shy away from the momentum sectors, but this market's been all about following the top 5 or 10 companies that all happen to be big tech companies. So it matters to everything. The negative bias that we've expressed based on looking at gamma continues to exert itself. So
Yeah, it's been a very orderly sell-off up to this point. If you take a look at our dashboard here on the SPY chart, you can see we're bouncing right into this dealer cluster zone. And so I want to just take a few minutes just to talk about how we use these zones and what we see happening here in the market as we enter this kind of G2 level dealer cluster zone. Dealer cluster zones are basically focused areas of gamma exposure. If we just take a look here at this gamma data graph, you can actually see, we've got it broken down on a net basis by negative gamma and positive gamma. You can see here, looking at the SPY gamma exposure, there's almost no positive gamma. So this has kind of been the case here for several weeks. We've been skewed heavily negative, and we've seen the market follow the gamma exposure levels to the downside. And so that's what we're really looking at here with these dealer clusters. We're measuring the gamma concentration levels because that's where option dealers are going to be the most active. Typically, when price comes into these dealer cluster zones, we see one of two things happen: either a sharp bounce or kind of a pause and then another leg lower. And so these are kind of inflection zones. And if you just take a look at what happened here on Monday, we dipped right into this dealer cluster zone and had a pretty sharp bounce until around midday on Monday. And then we were just kind of bouncing here at this G2 level, which is the highest negative gamma concentration level. And here we are again today, bouncing right through that G2 level and kind of selling off. And so I think this dealer cluster zone, with all the volume that's coming in here at the 420 strike and lower, you can see significant volume, 419, 418, 417, all the way down even to the 410. And we've seen a lot of volume coming in previous days at the 400 strike. Even some more today here. You can see this big gamma concentration at 400. So This dealer cluster zone, to me, looks like we're going to continue to be skewed to the downside, and that this inflection point is not going to serve as a major bounce. We might see a temporary small kind of like dead cat bounce, but the current environment looks like further downside is coming. We've got gamma exposures, increasing at the 415, 410, and 400 level. And so option dealers are going to continue selling as investors and other traders are selling. So they're going to have to hedge their positions by selling into the sell-off. So it kind of just exacerbates, the potential sell-off that really has been orderly so far, but could eventually result in a big capitulation, in the days and weeks to come.
Yeah, it's interesting. I'm really liking the addition of the 0 date expiration. I just took a quick glance at the website on the Gamma dashboard at SPY, clicked over to 0 DTE, and we were around 420 at the time, and I was like, hey, it looks like we've got a concentration at 418. This is at like 11:34 a.m. Eastern time, and sure enough, look at where we closed. We were about at less than, about 0.1% off from that.
So we talked a little bit about, what these dealer cluster zones represent. Like I mentioned, these are option dealer gamma concentration zones. These are identifying both on the put side and the call side where option dealers are going to be the most active. Since we're in a negative gamma environment, this is most likely going to result in further selling, especially as we see those gamma concentrations coming lower. We looked at here an example on the SPY. Let's just take a look at the SPX. We're seeing almost the same exact picture, a lot of volume coming in at this 4,200 strike today, obviously, but more volume coming in the strikes below 4,190, 4,175. The 4,100 level has seen a lot of volume come in recent days with gamma exposure growing there. Another interesting chart we shared yesterday in our Discord is this chart on the Qs. This is a year-to-date chart with the daily candlesticks, and we've got our volume profile here on the left side. And you can see, had a big ramp at the early part of the year, especially in May. You can see the circle. This was like a quick 10% jump on the Qs within just 2 weeks. And when you're looking at the volume profile, you can see there's not a whole lot of volume that accompanied that ramp. So this is kind of like this purple highlighted area is kind of like a pocket, where not a lot of volume took place as the price traded through this level. And so we've kind of been bouncing off of this 350 level on the Qs a number of times, 350, 355, over the past few months since July. But here we are, big down day today, and we're about to re-enter this zone. Our thesis in Discord was that if we start entering this zone, this could see some increased volatility and potentially a big drop. One of the things I noticed that was interesting is that this 350 level also coincides with our G2 level on our gamma levels chart. So, this is a dealer cluster zone below this 350 level. There's a lot of volume that's been coming in, bringing price lower, as you can see here. And we've got gamma increasing at this 345, 340 level. And so it's just very interesting to me that these are levels that coincide with the data that we're analyzing from gamma exposure. And so, this could be a potential inflection zone again to the downside is where it's currently skewed when we're looking at the Qs gamma data. The Qs are very heavily skewed negative, and we're about to breach this big 350 strike price. Combining a little technical analysis by analyzing this volume profile data along with our gamma exposure starts to paint like a bigger picture of how the market is positioned and what's actually happening at these various levels, especially when we look at the options data.
Yeah, I continue to be amazed. This summer, you were consistently bullish, based on gamma, and I was skeptical for other reasons, but sure enough, we went right to the targets that you had identified, and we turned at basically the spot where you said we would turn. Like you said, this isn't necessarily an indicator. It can be used to indicate something, but it's basically indicating how the market's positioned under the surface. So it's not entirely theoretical as a line on a chart might be. So.
Yeah, it's really taking all the data from the options market and running an analysis to see where are the pain points in the market structure. Where is everybody positioned and where is the most hedging activity going to have to take place? You brought up a couple of interesting points, Sean, about the VIX also in Discord. You want to talk a little bit about what you're seeing going on there in the VIX?
Yeah, I mean, people hate charting the VIX. One guy that he's more of an order flow trader that I know, but we would have friendly conversations about like, well, conceptually, how can you chart the VIX? Like it's volatility. It's it shouldn't be conceptually able to be charted. And it's like, well, you can chart almost everything. You can chart if you can find a way to get data points on paper for some, the number of times a frog hops when it's raining really hard versus softly. There may be some kind of a identifiable trend there,
right?
To use kind of a comic example, but and you've also posted some helpful charts with the VIX, but just pointing out this 24 to 25 plus target, and that includes some gamma levels. Zero gamma being at, I think it was at 19 last I checked yesterday. And when we were looking at it. And there's also a indicator I picked up from a guy named Brian Watt, who he used to post on Twitter, but now I think he just has participation through YouTube. But Brian, several years ago, turned me on to the whole moving average. And the whole moving average, which on this chart that I posted on Discord, has a pink line to identify the that indicator. The fact is, I said, let's look at that 26 area. Holding above that should lead to reaching those upper targets that you've mentioned. And we actually did breach it. We ran, I think we almost made it to 22. And interestingly, we closed, literally just below that whole moving average line. So as the market likes to do, it leaves open both possibilities of like the bullish or bearish scenario playing out tomorrow. So we we closed at 2019, and I was saying watch for that 2026 area to be breached. So
Yeah, I think we tagged the 23 level 2 days ago. So yeah,
yeah,
VIX is really picking up. I mean, if you think about it, like end of September, we were almost tagging 12. Yeah, here we are like breaching the 20 level. And so, I think it's just a matter of time before we tag this, downward trend line. And I see market participants piling into like the 30 strike, the 35, 40 strike on the VIX. So people are definitely getting a little sketched out here with this pickup in volatility. And like I said, it's been orderly up to this point, but that's often the precursor to more volatility coming. And so we're really at a precarious spot right now. Earnings is one of like the main factors, that could be a catalyst in either direction. And so we're kind of at peak earnings season right now. I know, Sean, you've been watching a few earnings names. You want to talk a little bit about what you've been seeing? I think you were watching Microsoft and Google yesterday and today.
We saw a mixed bag with Google, Microsoft. Microsoft was, they basically beat everywhere, all their metrics and estimates they beat. The stock actually, it's like its best showing today was basically just keeping some of the gap up that had occurred, but the daily candle does not look great actually. And one of my friends used to be a sales professional in tech land, and she's a professional day trader now, and she was actually saying, these big tech companies, they tend to be the last ones to acknowledge or show impact from what's actually happening. And she basically was half joking that disaster will strike and then they'll try to make a lot of changes all at once. I tend to be contrarian once again, but Microsoft going up here, to where it closed and beating all of its numbers. If things keep getting worse in the real economy, how long can that really last? So, I personally would look at it as exit liquidity if I were long, but we still have those higher targets there with where the gamma clusters are, and so far it's respecting the levels. So, I mean, could it go up to 350? Sure.
Yeah, I mean, it's just interesting. The other day, we saw a lot of volume coming in at the 345 and 350 strikes. Speculators, I guess, betting on a move higher in Microsoft, and so a lot of this gamma really increased yesterday because of all that volume. And then we saw a lot more volume, obviously, coming in today at these same levels, and so that's right where we popped into, right into this 345 level, and so. It's always important to watch volume by strike, especially right before earnings, just to get a sense of, where does the market think that the likely price will reach on an earnings jump, either lower or higher. So I think it's always just, it doesn't mean that that's where it's going to go, but it's where it's showing you what everyone else thinks that the price is going to pin to. And so that's kind of that's how I look at these strike levels and how I use gamma exposure. And, our dashboard has a really nice feature, just laying it out very simply for you. So you can see exactly, where the volume's coming in at what strike levels, and does that correspond to like big gamma exposure, or do we see big gamma increasing after big volume spikes? All right, guys, if you're interested in using our gamma exposure dashboard and all the other tools we have available, go to our website, geeksoffinance.com. We've got 3 different product tiers ranging from $29 to $159. You can access our gamma exposure dashboard and see real-time gamma updates, signal levels, volume by strike, and a number of other really cool features. And we're adding new features on an ongoing basis. So you definitely want to check that out if you get a chance. Sean, thanks so much for joining me today. I hope everybody found our discussion valuable, and hope to see you guys in the next video.